Welcome in. We have a new year and a new set of economic questions to ask. What's going to be going on with blockchain? Are data centers the bane of our existence? And are we going to see some form of crash or correction in 2026? I don't have a magic crystal ball. It's been out of operation for a while, but we've been talking about what are we even doing? Like what I had a question in my head all last 2 weeks. I hope you had a Merry Christmas. Hope you had a great New Year. What are we even doing? Like, we know what's going on. We know that red and blue is a mechanism to chase green. We know that because of billionaires and trillionaires, like Larry Fink have already said, we're going to be blockchaining everything. We're going to be taking our physical dollar and throwing it into the cloud. Stable coins to reevaluate our dollar and alleviate our debt. What are we even talking about? Robots that are going to be working our jobs. AI that's going to be ripping apart the white-collar, entry-level job market. We're already seeing it in the numbers, the underemployment across the board, skyrocketing if you're under the age of 30. Affordability, especially if you're under the age of 30. What are you looking toward? It's is dark the right word? I don't know. We're not going to stay in the dark place, but we are going to start in a dark place because the 2026 economy is more than likely going to be a lot of the same. And the way I want to break this down is in 3 F's. I got my notes in front of me. The 3 F's are the foundation, the fuel, and the fire. We're going to talk about where we're at right now as we walk into 2026. We're going to talk about the fuel that is currently laying on the ground, I believe, set to be put on fire. Now it's a matter of who's going to drop the match? Who's going to light up a cigarette in the kitchen and let it all go ablaze? I don't know. We are going to speculate a little bit. We're going to speculate together. I want to start on the foundation with our debt. Can we bring up the debt clock to get ourselves started? Beautiful. If you've never seen the U.S. debt clock, here it is in all of its beauty. The U.S. debt clock tracks our debt across all different variants and niches of our debt, from our industrial war system to the tariff revenue. But if we go all the way to the top, we'll see that the total U.S. national debt is now over $38.5 trillion. It's not even a fathomable number at this point. And it's gone up. Let's see. Let's just silence ourselves. $100,000. $100,000. 100,000. It just keeps moving. Just keeps going. And yeah, that's not stopping. So we have our debt problem. And I'm going to go through 3 Ds on this because the foundation of where we're at is really important. We're in a position right now where our debt cannot get paid down. The debt's not getting paid off. The deficit shows us that. We're currently spending way more than we're making. Can we bring up that graph real fast? The deficit graph? The deficit shows us right here. Look at this. Zoom in real quick. It says total receipts versus total overlays. This is from our Treasury, November 2025. Total receipts, $336 billion. Total outlays, $509 billion. In English, that's $336 billion in, $509 billion out. Let me ask you a question. If you made $336 in a week but had $509 of expenses, are you making any money? Nope, you're not. And neither is our government. And this has been happening every month, every year. I believe really since 2001. This is a great graph, by the way, if you're ever just curious how we make our money, where we spend our money. Just scroll down through this document real quick. It's a really cool one. We can just zoom through it. All these different ways that you can look at the graphs, all the ways you can look at the numbers, tables, pie charts, line charts. Anytime you see political conversation around our economy, this document is a great way to come to a nonpartisan source on what's true and what's not. So that's the deficit. Let's talk about the dollar. The debt's ever increasing. The deficit's fueling it. And the anchor of the entire economy is dissipating in front of our eyes. The dollar is weakening consistently and constantly. This is the anchor of our society. This is the anchor of the power dynamic that allows the American oligarchs to have control over the world. We globalized the world in 1944 at the Bretton Woods meeting. We allowed every currency to link back to gold through our dollar. We exited ourselves from that in 71, implemented a petrodollar that originated from the Yom Kippur War in 1973, where we decided to go to Saudi Arabia and all those other countries that were protecting the oil and said, hey, if you let this petrodollar thing be a thing, we'll protect your oil. And then all of a sudden, since 94 or 74, we've spent the next 50 years protecting oil consistently and constantly. Proxy wars consistently and constantly in Middle Eastern countries that happen to have a lot of oil. By the way, shout out Venezuela, one of the largest holders of heavy oil in the world. You know who else has heavy oil? Canada, the 51st state. You know who else has it? Greenland, another one that we want to colonize. Why are we looking to colonize all these places that happen to also have a lot of oil? Maybe it's because we want to continue our oil dominance. Let's keep going. Further into the foundation, inflation. Nobody is getting this under control. Again, what are we doing here? This is the last report that we released, the Bureau of Labor and Statistics, on inflation. 2.7%. That's the lowest we've had it in the past few months. That's great. It was 3% at the beginning of the year, so cool. We're slowly getting that down. But you're being gaslit. You're being gaslit. Let me tell you why. Because you're being told prices will come down. Politicians saying, oh, we're going to get prices down for this. Oh, we're going to get prices down for that. Oh, we're going to get prices down for this. Do you know what getting prices down means in the economic space? It's a word called deflation. I would just like for you to Google ChatGPT, Claude, whatever source of data you would like to utilize to ask, is deflation good or bad for an economy? Look it up. You're not going to find a single source that says it's good. It is detrimental. In fact, one of the leading indicators that led to the silent decades of Japan. Deflation's not beneficial. It is very bad. Recession, depression, all of that is usually linked to prices going down. So if you think that home prices are coming down, I got word for you. They're probably not. If you want cheaper healthcare, go figure 2026, you're going to be paying a lot more than you did last year. Cheaper cars, cheaper childcare, cheaper any kind of care, healthcare, Medicare, all of it. From your family to your child, it's going up. And it's not coming down. Why? A lot. Macro corporate greed mixed with policy, legislation that allows for this. Why do we allow for this? Well, a lot of people could look back at Citizens United. Lobbyists are allowed to lobby at an incremental rate that is now infinite. What used to be capped is now infinite. And so now anytime any legislation even appears on the floor that could possibly rip even $1 or a shred of the share from a billionaire, gone. We don't want this voted on. How do we have power over that? Citizens United, infinite money. So inflation's out of control. Back to originally the foundation, because we're going to stay stuck on these 3 F's. Foundation, fuel, and fire. Stick with me. Hear me. The debt is ever increasing. The deficit is fueling it, and nothing's being done to stop it. The dollar is weakening, and inflation isn't going away. Did you know the Federal Reserve's goal is 2% inflation? Their goal is 2% inflation. They've been over it for 5 years now. So how well are they doing? Everything keeps going up in price, and they're going to keep the prices going up as long as people are willing to buy. And you may be saying, well, Zach, who's out there able to buy right now? I can hardly afford to go to Chipotle. I'm filling up my grocery cart with items that I think are frugal, right? I'm not going buying crazy stuff. I'm trying to be frugal. I don't want to eat a bunch of red dye 40, so I'm trying to eat healthier. Highly encourage that. But now my grocery cart's $350, $400. Do you think that's an accident? Do you think, oh, that's just how things go? No. It's greed. It's greed. And it's inflation that is ever persistent and accumulating year over year and not stopping. And you're just being told, that's normal. That's just how the economies go. Economies have to inflate in order to remain healthy. If we don't allow these billionaires to keep growing their net worth, you're going to have a worse lifestyle. How are you going to get your Amazon packages if Jeff Bezos doesn't have 13 retirement accounts? Come on. Meanwhile, people are spending fake money to buy groceries and gas. Fake money. Using pay later services. I forget the company that was... John, what are the names of those pay later service companies? There's Karma. That's it. Karma. Is it Klarna? Klarna. Okay. Look it up. They reported that of the people who I think Affirm's the one for a lot of the digital transactions, but with Klarna, you can actually put it on your phone and you can pretty much buy anything you want with it now. Check this out. Klarna reported that a third, it's like 31 point something percent of their users were utilizing buy now, pay later services for groceries, gas, utilities. This is a real stat. Some say it was like 25%. A quarter of people can't afford food to go in their fridge. And we're talking about stock markets at all-time highs. We're talking about the GDP. What are we talking about? We just sent more money to Africa. We just re-signed our deal to throw more money to Israel. We got this loan going out to Argentina. We just sent more jets out to our good friends in the Middle East. Meanwhile, people are homeless. People don't know how they're going to get started in the asset accumulation game because the buy-in has gone to an exponential level. Your boomer parents, your Gen X parents had the opportunity to get in on the asset game before things started to inflate. And this isn't just random. We can look at the pathways from 1913 all the way. If you don't know what 1913 is, Federal Reserve, Creature of Jekyll Island, great book. Author's a bit kooky, but I love him. 1913, there was a bank panic 6 years prior. 3 years after that, they had a meeting. 3 years after that, Federal Reserve. Passed 2 days before Christmas with a lot of the lawmakers not present. That's weird. And a boat sank before that. Unrelated. But the guy who gave them the room to meet to form the Federal Reserve, our country's central bank, is also the same person that financed the build of the Titanic and then had a room on it and didn't get on it. That was weird. Nothing to look at there. Just Jack and Rose. It's a love story, guys. It's a love story, the Titanic. You should love it. And then you get to the Bretton Woods Agreement in 1944, where we get all the countries in to say, hey, dollar is king. And then we remove that in 71. And then we have the Yom Kippur War. Then we walk into Reaganomics. We shift the tax brackets. We remove regulations. We get rid of this union thing. We don't need unions. Ugh. Less of that. 90s, NAFTA. Let's send jobs across the borders. Canada, Mexico. Get them out of here. 96, we get the AT&T communication bill. We're mass mediafying ourselves. 99, Glass-Steagall gets removed. That was originally from FDR's Great Deal. The deal in 1933 that brought us out of the Great Recession, they've been slowly ripping those cords out. Slowly but surely. 2004, we have an SEC margin rule change. We don't even have to talk about the Patriot Act because you had to be patriotic to support that. And then you walk into 2008. Post 2008, we have a bill called Citizens United. Allows anybody with money to use their money as speech. Your dollar is now worth speech. And how in a free country are we allowed to limit someone's free speech? That is un-American. Your dollars, spend as many as you'd like. Because that benefits the working class. That benefits the person who has a share in our country. Oh, wait, it doesn't. It benefits the shareholder, not the shareholder in our country. Shareholder in companies, not country. Even though this whole country is starting to feel like more of a company. What's the fifth one in foundation, Sean? I need to slow back down. I'm getting aggravated. Job market. Let's pull up this graph. Jesus Christ. Stick with me. So let's listen to this old hag talk about the job market. His name's Jerome Powell. He's been in office since 2017. Joe Biden re-upped him, and he is going to be out of his job come May. He is going to be replaced. This is the chairman of our Federal Reserve. Let's listen to this old zombie speak about our economy.
Time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation.
Pause.
But it's a complicated and
they haven't hit 2% inflation for 5 years. Just before you let that gaslight line get past you, there's zero chance that they get to 2% before he gets out, and he has not hit 2% the entire time. Let's continue.
unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers is also going way down, so the unemployment rate hasn't moved that much. But
pause. I understand the supply and demand argument of labor force, but let's be honest with ourselves. The job openings have ceased in what was growing year over year since ChatGPT came out. Can we look up that graph real quick? ChatGPT versus job openings. If you haven't seen this one, little correlation versus causation. But let's not just pretend this is a supply and demand problem. That's a cop-out. The reality is AI is infusing itself into the job market. People are demanding more money because they simply can't afford life. And these exact same companies are being affected by this thing we're going to talk about in fuel, tariffs. There are higher expenses to be a company that is profitable, bringing in consistent revenue over their expenses in this day and age. So what is a company to do when everything around them has become more expensive and the people that they're trying to employ are demanding more money? Meanwhile, there's this new tool that can replace that person. What do you think they're going to do at scale? I don't know.
I found this on Facebook.
There you go. That's fine. So post-AI shift. So the blue line is job openings, and the red line is the S&P 500, correct? I can't see it, but I believe that's what it is. Yep. So the blue line is open jobs. The red is the S&P 500. And that little dotted line going vertical, that's the invention of ChatGPT. I believe it was November, 2022, 2023, 2022? Like, what the heck? So when you hear normal everyday people arguing that this economy is not as good as people say it is, meanwhile other people are like, but the S&P 500, it's at all-time highs. What are you talking about? You know the top 10% owns 90% of the S&P 500? What are we talking about here? Our Lord and Savior Larry Fink is the person who has their hands in 96% of publicly available stocks. What are we talking about? That's not helping the normal everyday person. That's continued to inflate the already drastic difference in our wealth gap. Oh, Zach, tariffs are going to bring jobs to our country. Can I tell you a conversation I had in New Hampshire? I had my last grandfather. He passed away. He's a great man. Love that guy. His name is Pepe. And we were at his funeral, and I had a conversation with a gentleman. He's I guess an uncle's cousin. I'd never met him in my life. But my dad was like, you'd enjoy a conversation with that guy. And I said, why? He said, he sells robotics. Oh. And I was like, okay, let me go strike up a conversation with this guy. He didn't know me. I didn't know him. We're like, oh, we're related? Okay. He's like 50, 55 maybe-ish. Like nice little silver fox look, buttoned up, sweater over top. You could tell he had a nice 401k. And I was like, what do you do? So I work in wholesale robotics. Oh, what does that mean? And by the way, if you've ever talked to somebody who you think you have differing beliefs with, just ask a bunch of questions. Just ask. Don't assert. Just ask. I was like, well, what does that mean? Oh, well, I work with companies like Tesla, Boston Dynamics, and a couple other out on the West Coast in California that sell robotics to companies for infrastructural use. So basically use inside companies and warehouses, not residential robots like Tesla's trying to put like a robot servant in your home that does your dishes. Not this guy. And so I was like, okay, well, what are you seeing? What are you seeing? Who's the top dog right now in the robotics world? I was like, I don't know. It's kind of like post-2001.com. We don't really know who's going to emerge as like the number one robotics person. I said, well, let's just play the game. Like when the number one robotics person is found, what does that mean? He said, well, it means that most all factory jobs throughout America will be run by robots. Okay. So interestingly enough, Trump wants to bring a lot of factories to America through these tariffs by forcing them back into America. So what does that mean necessarily if all companies are going to be run by robotics, simultaneously we're bringing more factories to America? He said, well, you're kind of already saying it. It's not going to work. We're going to have a bunch of factories run by robots that are running our society, and it's not going to bring new jobs. So interesting. So you think that in the near future, that robotics, even without AI, is going to rip apart industrial jobs? He said, yeah, 100%. And I said, okay, well, what about AI? Because we have all these data centers going up. And he paused me. He said he didn't even want to continue my rant. He just wanted to step right in. He said, listen, AI is going to rip apart our society. Combined with robotics, there are not going to be new jobs created. There just aren't. It doesn't make sense, guys. Listen, it's not like a selfish, evil, like blood sacrifice kind of thing. Like just think about the company in your own hometown that needs an administrative position. I'll give you a great example. Another conversation I had in New Hampshire. One of my cousins works in pest control. He's making like 90, 120 grand in pest control. That's awesome. He said, yeah, I got started with a buddy who started the company. We started young. It's just like the three of us, and we're really doing well. I said, that's awesome. Like, I love business. Like, what are you seeing as your hangups right now? What are your growth pains? He said, well, actually, our scheduling system is jacked because we have so many new clients. We don't have enough people to service them, and just getting the route right, who we should go to first right, is becoming more and more difficult. I said, well, how are you guys solving that problem? He said, well, right now we're using AI. Okay. But it sounds like a position it needs to be hired for, right? He said, yeah, we could really use somebody who's in there doing that. I said, well, why aren't you? He said, well, I don't really know, but the AI is working for us right now. And here's the thing that we talked about more and more is that AI is only going to get better. It's going to get better at understanding the routes. It's going to get better at understanding tendencies and who works what. It's going to get better at all of these things. And it's going to go past that. It's going to be able to bring people in and onboard them into their services and even maybe have conversations with them on the phone as an AI robot. And that is a position that will go unfilled by a human. And that's one position at one company. Now let's talk about the entire country. And if you do not think that you're going to call a company and speak to somebody that is not real, that is an AI-infused large language model based off of that company specifically, AI, robot, whatever, I think you're wrong. I think you're wrong. I had an AI call me right before this call. Right, Sean? Right before this started, AI bot called me. It's happening as we speak. So you may be thinking, Zach, well, what do we do about this? I ask myself that question every freaking day at this point. I don't know. Do you become a cog in a system that's inevitable and grow with it? Do you rip yourself out from the system, try to detangle it? Would there be enough people to do it to actually cause a change? Is it there? Do we need to have this tax strike that everyone's talking about? I don't know. But that's the foundation of where we're living. The debt's increasing, the deficit's fueling it, the dollar is weakening, inflation's going unsolved, and the job market stinks. Let's get to the fuel. That was our foundation. Stick with me. Hear me. We got more to go through. I want to bring up a video for us to get started on fuel. Plug your ears if you can't hear his voice because it makes you angry. I get it. I'm playing a video at the end of this from a guy that every time I hear his voice, it makes me want to stab him. Sorry if YouTube's going to flag this video for me saying that, but it's true. This is President Trump, April 2nd, day after April Fool's Day. I thought it was April Fool's Day, where we brought out a bulletin board on tariffs. Let's play this real quick.
Effective at midnight, we will impose a 25% tariff on all foreign-made automobiles. And starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think
thought
about
about
it
it a
for
lot.
many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people.
We're very kind.
You're not so kind when you got ripped off with your salaries. My auto worker friends and my Teamster friends and all of the unions that typically voted Democrat, they're not voting Democrat anymore because worker, whether union or non-worker, they're for the Republicans now. That's what happened. But we will charge them approximately half of what they are and have been charging us.
With our made-up
If
math.
you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So
Pause real quick. This is how we're announcing complete change to our entire worldwide economy, by the way. This is how, April 2nd of this year, we got the announcement that we were going to completely destabilize and change the way that we do world trade. With a fifth grade poster board, with made-up math formulas, and we slapped every country in the world in the face. Hear me. This is important. We can get into Trump and we can get into how this is weird and odd and all that, but let's just be very clear about one thing. We slapped every country in the face with this. They knew it was coming. Okay? No argument there. You campaigned on it. Tariffs are going to make us rich all the time. I heard it. I watched it. We slapped every country in the face with this. And for you thinking, well, we're America, we can do that. I'm telling you right now, every other country in the world is getting tired of America gets to boss around the world's BS. We are seeing other countries sell off our bonds. We're seeing other countries get out of investments. And we're seeing it happen all across the world that nationalization within specific economies, Japan's a perfect example right now, where they're getting away from the globalization that we created in 1944 through 71. And they're getting back to, why don't we just support our own country? BRICS is thinking, why are we still trading oil in dollars? There's so many countries right now that are actively working away from the dollar. And April 2nd, we just smacked them all in the face. We gave them more of a reason to get out of our debt. We don't need a bipartisan opinion on whether or not other countries feel a certain way about us or not. We can go right to the bond market. China, Japan, Germany, even Australia, other countries are selling consistently and constantly. Millions, billions of dollars in our debt being sold back off. They don't want to hold it. The world reserve currency, they don't want to hold it. Why? Because it's weakening. Why, as an investor, would you want to hold a weakening investment? And there's some who will say, and you may be a tinfoil hat wearer if you believe this as well, that we are purposefully weakening our dollar, that we are purposefully working our dollar back so we can work our way into a blockchain society, a Mar-a-Lago Accord of sorts, which we're going to talk about. Whether or not this is some form of 5D chess or not, countries felt disrespected, and we see the results in our weak bond auctions, our high bond rates, and the surplus now in sellers of our bonds. By the way, quick little trivia question for you. If you don't know the answer to this, it's okay. Who holds the most of our debt? Which country? Which country holds the most American-based bonds right now in the world? Take your guess. Which country holds the most of our debt? And if you think it's China, nope. If you think it's Japan, used to be. Germany, the UK, good guesses, but it's none of them. You can look it up right now. Look up Federal Reserve Cayman Island report. Yes, the Cayman Islands own $1.8 trillion worth of our bonds, making them the number one holder of our debt. The Cayman Islands. You know that place has a GDP that's 1% of Missouri? Yeah, they hold the most debt. Wow. There must be a lot of good business going on in the Caymans. No shell companies or U.S. hedge funds utilizing the discretionary spending and holding of our assets off some weird island. Billionaires have never used islands to hide stuff before. Pfft, never, Epstein. I don't get it, how we can see something like that and not go, that's weird. Japan holds half of what the Cayman Islands holds right now. Outside of the Cayman Islands, Japan is number one, but also Japan is selling. Japan isn't accumulating. Japan is slowly selling. Japan themselves has said they want to get back to a nationalist-focused economy. They don't want to be burrowed down by having to worry about or think about all these other economies intertwining with their own. They used to be the debt country of the world. Everyone had some of their debt. Now they're getting away from it. And I believe that America is getting to the point where we're going to have to go nationalistic ourselves, and we don't really have much to base off of. We don't really have a lot of productivity to hang our hat on. Countries feel disrespected. Let's go to consumers. I have 3 C's for us, by the way. Countries, consumers, and companies. I'm sorry. I'm riled up this morning. I'm getting off. I'm going to slow down, take a deep breath. Take a deep breath with me. All right, I'm good. In the fuel, we have countries, consumers, and companies. Countries felt slapped in the face. We see the numbers in the bonds. Consumers, they are going to be paying the tariff. This is not a debate, by the way. I don't care if you had that conversation with your Gen X uncle or your boomer grandpa about how tariffs are going to restructure and make global trade fair again. We are paying that tariff. The human in this country is paying that tariff. The importer pays it at customs, at the border. It's right on their sheet, based off of whatever it is, based off the genre or category of the good or service. And then the wholesaler receives it. And then the distributor receives it. And then maybe it goes to the wholesaler, right to the merchandiser, but then it goes to the merchandiser. And slowly but surely, that fee is going to get passed on to guess who? You. It's happened already. And it's happening more and more. Where companies that are holding on to the fees thinking, we don't get to pass this on right yet, are slowly and surely passing it on. It may not be in one foul swoop, but 1% at a time, 1% at a time, 1% at a time. And that's one other reason why inflation's not going to go down. And prices aren't going to just suddenly deflate. And guess what? Even if they did, that means recession. Deflation is not a normal economic sign. We have to keep growing. We're a debt-based society. The usury model, the fractional reserve system model that we have running right now, runs on debt. If we can't make more debt, we can't keep growing as an economy. That is why things can't deflate. That is why prices won't go down. But yet you're being gaslit by politicians every 4 years to say, I'm going to get prices down. I'm going to save America. And none of them do it. Not a single one. Because they know, or maybe they're just stupid, but they know they can't cause deflation. Then historically, we're going to look back on the term like, look at that guy. He had a recession. What a loser. Can't have that. It's all about a 4 to 8 year term looking good in history. It's all about that. It has nothing to do with passing off the torch to the next leader in hopes that we create a better America. It has nothing to do with people and everything to do with profits. It has everything to do with green and nothing to do with blue and red. It has everything to do with continuing this debt-based society, keeping the ball kicked down the road, keep printing money, keep it going on. And 2026 is going to see more of that. We're going to talk about the fire because the fire is what's going to happen. The fire is what's going to happen. We're talking about the fuel right now. The foundation's been set. The debt is growing. The deficit's not getting fixed. The dollar's weakening. Inflation's prevalent. The job market's stagnant. The fuel. Countries felt disrespected. Consumers are paying the extra cost. And now companies are stuck. What is a small business supposed to do right now when the next person that they maybe want to hire, maybe let's say they don't want to utilize AI. What do they do? What are they actively doing? When costs for you and I are up exponentially across the board, 40 to 50% in most categories since COVID. What does that mean? It means you need to make more money. And if you need to make more money and they need to hire for a position, what do you think they're going to do? They're going to either A, have to pay more than they can afford for that position, or offer it for a position or offer it for a wage that you're not going to accept. And that's where we're at. A lot of young people not taking on positions because they simply don't believe in a career at any company. They don't believe that the 10, 20, 30 years is going to be worth it. What if they put in all that work and there's nothing at the end of the rainbow? What if they get 8 years into a position and it gets replaced by a robot? What if they get 10 years into this whole thing and it collapses? There's not a lot of faith in the long-term sustainability of our economy, so why would anyone buy into it at 22? I get it. I completely understand that mindset. So what's the small business to do? Well, they're left with a decision. Pay more or utilize some form of AI or automation. And at scale, I think they're picking the latter. What's the small business to do? We're not talking about Nike. We're not talking about Amazon. I'm talking about the normal everyday person that wants to add a job to the market, that wants to be a locally focused community building business in their area and has this position they're in where they're stuck. They want to bring in good workers. They want to run a good business. But guess what? You got to make $106,000 right now on median to afford a home in America. They can't pay that. They can't do that. A lot of small businesses too, especially if they're importing in some form of good, are having to pay the increase in cost, that tariff increase in cost. Meanwhile, inflation is ripped across the nation, upwards of 40 to 50% on everything. So what are they supposed to do? It's not about just, again, this evil blood cult that's making everything bad. It's just the person who's put in a pinch situation too. Do you know that 95% of jobs in America are created by small businesses? That's a real stat. Some say it's higher. 95% created by small businesses. What are they supposed to do when they can't afford this ecosystem, this economy? That's where AI and automation comes in. So companies are stuck, consumers are paying the bill, and countries feel disrespected. I want to talk about the bond market, but I think I might skip it. I think I might skip the bond market. We're going to do a whole video on the bond market. Next week, we're talking about silver. Next Wednesday, we'll talk about silver. That Friday, we're going to talk about the bond market, and I'm going to bring on a economist to talk with us on that. I'm going to skip that for now. Let's get to the fire. So we talked about the foundation of where we're at, the fuel that's actively laying on the ground. Now let's talk about the fire. Who is going to drop the match? What is going to be the signal that we have now broken our system? Some say it happened last weekend, where mysteriously there was a report that came out, couldn't really be confirmed, that a highly shorted silver bank went under. And it went under the radar. And that supposedly, we're speaking completely in conspiracy right now, by the way, the Federal Reserve stepped in and saved that bank. And then mysteriously, can we bring up that repo graph real quick? I think it's the first one we have. So this is, I'll explain this in a moment. But $70 billion went out from the Federal Reserve into banks the same exact weekend. So we have an unconfirmed report of a bank failure. That bank supposedly had shorted silver to a large amount. Then we see silver drop 12% in 24 hours. That's nuts. And then doesn't go back up. You know what's really interesting though? In Japan, in China, parts of the EU, silver right now is trading for over $100 an ounce. Hear me. The dollar, can we bring up a silver graph? I think today it's trading at like $72, $73 an ounce. Overseas, it's not trading for that anymore. That's never happened, by the way. It's called paying above spot. And other countries are paying well above spot in a market. Oh, yeah, 72 right now. We can see that dip. Can we just bring it like to the last week? Can we do that? Can we do the last week? Yeah, you can just zoom in. Perfect. So we can see that meteoric rise it took from November into December. I think it went up over 56% in just a 2-month span, and then whoosh, drops. Around the same exact time, we get this mysterious article that talks about a potential bank failure. Then we also see what I'm about to show you happen in what's called the standing repo facility. Now, just to be clear, the standing repo facility is not money printing. It's like a federal pawn shop. The standing repo facility allows for an institutional bank to say, hey, I need cash. I need cash now. It's my money and I want it now type deal. I'm going to give you this bond. I'm going to give you this mortgage security. You can hold it for a bit, but I need money right now. This is that graph that shows the use of the standing repo facility. Now, I want us to zoom in real quick. Let's go to 2025. We're going to come back to 2021 because this is almost an unreadable graph if we go back to 2021. Let's look at just 2025. This is November, October, and December. Now, Halloween night, the spookiest night, we had a huge hit on this. Nearly, I think it was 58. Oh, it's right there. My bad. $59.5 billion. $49.5 billion. My math's wrong. I could read it and my math was wrong. $49.5 billion got infused into banks in basically what's a short-term 24-hour loan for quick cash. That was the largest amount it had ever been hit for. Largest dollar amount it had ever been hit for in this repo facility, which was put into place permanently in 2001. It's the largest it had ever been hit. Billions and billions and billions of dollars that the banks are saying, we need this now. Please give it to us. I'm here to tell you that number got surpassed December 31st. $74 billion went into this. The same exact weekend that we saw the silver correction, we saw paper silver seemingly detether from other countries, and all the while we supposedly had a little shadow bank failure. I don't know, but that all seems a little bit too conspiratorial to me. It all seems a little bit too, I don't know. It seems odd. Why would banks need this much money? Why would banks be this close to fracturing themselves that they have to take $70 billion out? Could it have to do with silver? Could it happen to do with just liquidity? I don't know. But the fact of the matter is, we have banks that have money issues right now. Can we go back to that graph? Because I know there's going to be people thinking, Zach, I know what this thing means. I know what the standing repo facility is. You're misrepresenting. This is just window dressing, brother. They're just making their books look better for the end of the quarter. Okay, we'll take that debate. I'm always down for debate. That's great. Let's pull this back to 2001 real quick. Let's see how many other times at the end of the quarter or the end of the year that this repo facility was utilized. 2021, sorry. Yeah, because it was different pre-2021. Yeah, it's all good. Okay, so let's look at this. 2021 year end, it was hit for, let's see, $0 billion. 2023 end of year was hit for $0 billion. End of 2024 was hit for $0 billion. And then at the end of this year, it's hit for $74.5 billion. But it's just window dressing. This is just typical bank stuff. Don't worry about it. It's above your pay grade. Don't worry about that. Why is it that in the last quarter, this repo facility account went from just something that was there as a backstop for banks to all of a sudden now we need it more than blood? We need it right now. Right now. I don't know. I'm not here to speculate. But when we talk about fire, I'm talking about bank failure. The thing that spurred along the Great Financial Crisis, the thing that spurred along the Great Depression was a bank failure. When a bank can no longer sustainably operate because people are asking for more money than they physically hold. You may be curious to know, how much do banks have to hold in reserves? Well, if you look up a Federal Reserve document that was put into place in 2020, it's zero. That's real. The Federal Reserve allowed banks to hold 0% reserves with them. Zero. So they're not federal because they're private. And they're not a reserve because they don't require reserves. Federal Reserve. So yeah, I think there's a lot of banks out there that when the tide rolls back, as Warren Buffett will say, we're going to find out that people are swimming with their pants off. There's going to be a lot of people that are hit by the bus they don't see coming. We're more than likely, if we didn't already see it last weekend, going to experience bank failure. And if you were to ask, Zach, well, if silver shorted itself and that caused the bank failure, well, what bank holds the most shorted silver? That would be Bank of America and JP Morgan Chase. Do you think, just putting it in your hands, I'm not going to make any assumptions, but just put it in your hands. If you knew that bank failure causes panic, bank failure causes stock market crash, bank failure spurs a long recession, and one of the most recognizable names in the banking ecosystem, the very man's bank who created the Federal Reserve and sunk the Titanic supposedly, his bank is they're just going to let it fall? You really think that? You really think that they're just going to publicly not, yeah, JP Morgan went under. We allowed it to happen. Sorry, JP. Try again. Make another bank. No. In my opinion, no. I think it's very, very, very respectable as an opinion to think that it was covered up. That in the shadows, these banks were picked up by their bootstraps and brought back up to life through a little bit of economic socialism for the bigwigs. And, we get to capitalize the wins and socialize the losses, as they'd say. Banks get bailouts when families get foreclosures. It's one of our favorite things to do since 2008. Bank failure could be one of the fires that is lit by this lack of liquidity in this higher expense market, this ever-inflating market, this debt-run society. When people can't even afford groceries, how are we supposed to create more debt? And guess what? When you can't create more debt, guess what the banks don't get? Interest. What's the number one source of revenue for a bank? Interest. What are banks not receiving when people can't pay their car payments, can't pay their loan payments, mortgage payment, any type of payment? They're not receiving their interest, the revenue, the thing that keeps the lifeblood of the banking system up and alive. Yeah, it is worth noting Warren Buffett retired the other day. That was weird. Rest in peace, a legend. It's odd to me that it seems like it's very clear and obvious that banks are going to struggle. And a bank failure is how we started the last two biggest recessions in our country's history. 1929 and 2008. Lehman Brothers and Bear Stearns in 2008. And a bank in New York in 1929. Let's go to the other one. The first fire I think that could happen is bank failure. The second fire I think is the most, how do I say this? Plausible is the wrong word. Just likely, because we keep doing it. We've been doing it since 2008. No, Warren Buffett didn't die. He retired. Just be clear. I did say rest in peace. Sorry. Rest in money. We're going to print money. We're going to print money. Okay? There he is, our good buddy Jerome. He's going to be out soon, so we don't even know if he's going to be the one that prints the money. But we do know a new Federal Reserve chair is going to be put in place via Trump and Kevin Hassett's appointment, current Treasury Secretary. Or no, not Kevin Hassett. Kevin Hassett's one of the people who might take up the position. Who am I thinking of? Scott Bessent, Treasury Secretary. I want to be correct with my statements. And when that happens, more than likely we're going to print money. Why? Because anytime we struggle, we print money. That's what we do. I want to show these two graphs real quick so we can get kind of a look at when we've printed money and why we print money. So let's start on the right-hand graph. This shows when we've printed money. I've highlighted them in yellow for you. QE1 came out of post-2008. QE2, we bought shorter term bonds. And then Q3, again, one of our largest prints, buying a lot of long-term bonds. And then we all know, and we're around for COVID when it happened. You'll be happy to know that in 2008 and 2020, before we printed money, we consulted, our government did, our Federal Reserve did, technically not government. Who do you think they consulted with to decide whether or not we should print money, invent this whole QE thing? Larry Fink of BlackRock. Isn't that nice? We consulted with one of the kings of our world to make sure this is a good move. And, you know, if I wanted my assets to inflate and I wanted the dollar to weaken so that my net worth could go up, I would suggest money printing too. And it simultaneously solved the problem of America's debt problem for a little bit. We see QE4, that was our biggest print, and then you'll see that red line. That's when we stopped, and we began QT. QT, that's you little cutie. Quantitative tightening, which is the opposite of quantitative easing. Now let's go over to the graph on the left, Sean. I want to showcase why we do this. So this is the 30-year mortgage rate. You may be wondering why the 30-year mortgage rate is so high. We're not going to get into bonds today, but it's essentially because the 10-year Treasury bond's high. Why is the 10-year Treasury bond high? It's because bond investors are demanding a higher yield on their investment. That yield bleeds into what bank can charge as a rate, and that rate bleeds to you. This is the 30-year mortgage rate, not the 10-year Treasury yield. I've highlighted in pink the 4 times we printed money. What do you notice was happening just before the money print started? And then what do you notice happens once the money printing has begun? Typically, when we print money to buy long-term bonds and take the bond supply down, rates go down. The reason we want rates down is so more debt can be created. The reason we want more debt to be created is because we're a debt-based society. We're a debt-based economy. We cannot operate if we're not creating more debt. So what they do is they print money, buy up the bonds from the bond investors that want that higher yield. Instead of allowing them to buy it for the higher yield, they come in and buy it, our Federal Reserve, to artificially lower rates and simultaneously giving the market a lot of liquidity, which solves 2 problems at once temporarily. We solve the liquidity problem while simultaneously lowering rates. It seems like a good solution. The problem is the long-term inflation problem is unsolvable once you've done this. Let's look at the 30-year rate right now. I don't have any pink on it. All the way on the right. Look at those high rates. Oh, no, it's on that graph. It's on that graph. Sorry. My bad. I misspoke. Look at how high they are right now. A lot of people listening to this are thinking rates are too high. I can't afford a home. I can't afford a car. I can't even finance my burrito now because rates are so high. Credit card rates, rates on everything, student loans, everything is high. That is simply because bond investors are demanding higher yields. And as long as bond investors are demanding higher yields, you will pay a higher interest rate. The only way to get this rate lowered is by printing money to suppress the rates, buying up long-term bonds to take the supply of bonds off the market, hold them, and detether ourselves from a free market, because that's what we did in 2008. We detethered from being a free market. We infiltrated our way into the free market economy and said, you know what? Instead of allowing this whole free market thing to work, why don't we just step in and solve the problem ourselves? Why don't we just artificially solve this problem now? I want to make my billions now. I want to do this right now. We can't wait for the natural economic tendencies to work their magic. No! We can't allow big businesses to fall to allow other small businesses to come up. We can't do that. No, because that means the people at top would have to fall. No one else can thrive without somebody else falling. That's what a free market is. And so what we decided to do was infiltrate the free market, infiltrate free market capitalism that we have just, it's been our bread and butter. In 2008, we have not been in a free market since 2008. There's a lot that argue it was before that, but it's very clear and obvious from right then and there, we have not been. And we're going to have to do it again. And after that, we're going to have to do it again. And after that, we're going to have to do it again. Because the only way we can keep the game going is by keeping to play the game that we invented. We invented this debt-based roulette that we're playing, where we're basically kicking the can down the road. 2008 was supposed to be a lot worse. 2008 was supposed to be a lot worse. For the banks, for the billionaires, for the stock market, for asset prices, it was supposed to be a lot worse. But instead, BlackRock and the Federal Reserve had this great idea that saved the economy and screwed you 15 years later and priced you out of a home 15 years later and got to the point where affordability is wondering, how on earth is my kid going to afford this world? 15 years ago. That's what happened. And at this current moment where we sit, we're sitting in a world where we're going to have to kick the can again. We're going to have to kick the can again. So that's the second bat of fire. I believe either we're going to see bank failure or we're going to see just trillions of dollars of money printed. It could be both. We could see bank failure and then money print. We could see money print beat the failure. We're going to have to. It's inevitable. It's inevitable. You can bet your bottom dollar on it. That is going to happen. And if you're wondering, what do I do with that information? Well, assets are going to inflate. The stock market would inflate. Assets like a home would inflate. Assets like gold. So all these other items will more than likely inflate with the dollar being printed, because every time we add dollars, we are adding to the monetary base. We are inflating our dollar, weakening our dollar. And if we look back to this French economist from the 1700s, Richard Cantillon, he had the Cantillon effect. And the Cantillon effect was his economic theory that said, anytime you print money, anytime you expand your monetary base, you add more money to the foundation of your economy, there's only three parties that benefit. Banks, asset holders, and the government. That's it. People who have speculated on that theory in the future have said now that pretty much whoever's standing closest to the money printer benefits. Whoever's standing closest to it. We're going to print more money because we have to. But let's talk about the third one. This is where we're going to spend a little bit of time, but also I don't know the answers, so it's going to be a lot of speculation. But the third is the dollar collapse. The third is the dollar collapse. Now, when I say, I don't even like this, honestly. This is where it gets nihilistic for me, to be very real with you and very dark, to be honest with you, because we're going to be blockchaining everything. We are going to be putting everything in crypto. We're going to be putting everything in the cloud. We're going to be putting everything in the stable coins. It's already being done. I think it was like ISO 22002 or something like that, the Genius Act. Like all these things are already happening. All these things are already happening. So inevitably, we are going to be walking into an economy that is nowhere close to the same as it is today. This literally means the dollar, the physical green dollar paper, is gone. Can you understand that? I can't. The dollar's just no longer here anymore. That's terrifying. To me, at the very least. It may not be terrifying to you. It's terrifying to me. Because that's where economic authoritarianism comes from. That's where we get to the point where we can think about something called the Mar-a-Lago Accord, which is a real thing, by the way, that happens to do with the weakening of the dollar so that we can transition to a new economy. Can I tell you right now, the Nixon shock, Reaganomics, post-2008, post-2001, 2020, all the times we did some crazy economic thing, sometimes where we said, oh, wow, we got to make this big major change to keep things going. Was the economy good during those times or bad? It was bad. You can't make giant economic shifts when things are good. No one's going to buy into it. So the only way you could create a new system, implement a new system, is during a bad economy. There's a lot of people who think, tinfoil hat on, stable coins and central bank digital currencies are coming purposefully by weakening the dollar to a point where we have a systematic snap that leads us to needing this new system to survive. And that's how it'll be sold to you. You don't have enough money? Here's UBI. That'll solve your problem. Have a robot and shut up. That's the world we're walking toward. And I'm not going to sit here and say, because I know people are going to listen to this, well, Zach, what's the answer? What do I do about this information? I don't freaking know. I don't know. I don't know. Because the entire system is going to shift. The entire way that we look at money is going to change. So how you handle your money, I don't know. I'm not going to sit here and say, invest in this. This is going to be your best opportunity. I don't freaking know. I don't have a magic crystal ball. The sun could burp out a solar flare tomorrow and all of our electronics could go back to caveman technology. I don't freaking know. I have no clue. We're about to bomb Iran. That's cool. People can't afford healthcare, but war. I don't know. Because ultimately, when I look through the economic timeline, I don't see a point in time where the working class is put into a priority position. Ever. Seriously. That's not just like dark or, oh, he's a Democrat, or, oh, he hates Republicans, or, oh, he's a Republican, he hates Democrat. It's everybody. Pre-40s, Democrats focused on the working class. That was really their thing. Not really anymore. When's the last time anybody stepped up for the working class other than Bernie Sanders? And we see where that went. For the American people, nobody. So what makes me think, I'm not trying to be nihilistic, what makes me think that anyone's going to do anything differently in the future? That the prim and proper Peter Thiel funded J.D. Vance is going to do anything different in the future? You need to take care of you. That's the best advice I could give you. When you have robot neighbors, I want you to focus on you. You need to have a garden. You need to be self-sufficient. Get that hand well pump on the well. Dig into books, meditate, prayer to your own God. I don't care. Pray to a table. Just talk to yourself. It's self-soothing. Learn about you. Care for your family. Support the number one asset in your life. The number one asset in your life you can invest in is you. Everything breeds off of you in your life, good or bad. You're the lone variable in all your success or failure. And in this case, I don't have a direct answer for you other than if you wanted to start a revolution to detether the entire machine. Because the machine is doing what it's supposed to do. The machine is operating as designed. And right now, I do believe, if I were to put on my tinfoil hat, we're walking our way into a world where the dollar collapses and we implement this new crypto blockchain world where we can eliminate our debt via stablecoins, reevaluate our dollar against it, and go into this new utopian America filled with AI tech cities and drones that can deliver your DoorDash and bomb a third world country. It's beautiful. Fireworks shows or drone shows now. I love it. That's where we're going. And if you think the Mar-a-Lago Accord is some crazy conspiracy theory, just Google Mar-a-Lago Accord. Google it. We're going to end with my least favorite human on the planet. His name rhymes with Barry Chink or Mary Clink or... Yeah, I shouldn't have said chink. That's a wrong word. That's a wrong word. I didn't mean that way. You're a big armor guy, right? Big armor guy. Can't have a chink in your armor. Let's look at Larry Fink, which is even a nastier word than the one I used. Let's look at what this man has to say about blockchain. By the way, if we don't know who this man is, he is the CEO and founder of BlackRock. BlackRock is a leg of Blackstone. Blackstone, founded by Peter G. Peterson, went 50-50 in the early 90s on creating BlackRock, and BlackRock is the one that created the collateralized mortgage obligation that led to the subprime mortgage crisis that led us into the 2008 crisis. BlackRock is also the one that funded and assisted with the Federal Reserve getting out of the 2008 great financial crisis, and also in 2020 was brought in to assess and help our economy, and they were able to get loads of money printed as well as take on more toxic assets themselves. Look up the Maiden Lane LLCs if you're curious. There's 3 of them from 2008. This man was the architect. Also, not just money printing from the Federal Reserve, you can look into 2008 and see who did Henry Paulson, the man behind the Toxic Asset Relief Program, the bank bailout that led to Occupy Wall Street. You should look up who gave him a call 2 days before Lehman Brothers failed. 2 days before Lehman Brothers failed. It was this guy. This guy has his hands in everything. And so I think listening to his take on where we're going in the economy isn't just wise, it's just listening to the guy who has control. Let's hear what he has to say.
Well, not only we did that, we've transformed how a portfolio is being engaged. And now with passive, active, publics, privates, and then we overlay investment technology and now digital, we're the firm that more and more people are going to worldwide.
What do you mean by digital?
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities, to bonds, across the board.
It's very loud here.
It is very loud.
But it's good. Capital's at work, Larry. You like that.
I love capital at work.
Yeah.
But there's $4.1 trillion of money in sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize a ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years, as we start moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. They can have their cash, and we have the largest cash money market fund that's tokenized called BITL. Our Bitcoin IBIT is now over $100 billion.
$100 billion, I know, from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know.
Look at these puppies.
But I grow and learn.
They're just drooling over this,
60
man.
Minutes.
I did say that.
Jim?
All right. Anytime, by the way, you watch a scripted interview with Larry Fink, you'll see that everybody that's within his orifice is just like, oh my God, the king is among us. Let's listen to what he has to say. That's how he's treated in the financial space. And he has said multiple times, tokenization is the wave. He's currently the head chair. I think they're going to inevitably replace him with somebody else. He's just the interim chair of the World Economic Forum. This guy has his claws in everything. And you heard him even mumbling and stumbling through explaining this blockchain transition. Even he was like, well, it's confusing to everybody around. But the point is this. The point is blockchain-backed currency is going to happen. We're already seeing it being tested in New Jersey and New York with blockchaining of all assets. That means there is no physical currency. That means you could sell technically shares of your real estate, pieces of your equity. Like it's confusing to me, and I don't want to sit here and say that I understand it all. I don't, to be frank with you. What I know to be true is there's only two options that you have, and this is what I want to leave us with. There's only two options you have. You can cling to one of the cogs in the system that are inevitably going a direction that you can see coming. Blockchain, inflated dollars, maybe a more nationalistic view on our economy, AI. You can get into consulting small businesses on AI. You could get into the world where you're going to be prepared to help prepare the robots and the robots that work in homes and factories and everywhere. Or you could rip your cog out of the system. You can take your specific cog and rip it out. And that's where you get to the point where if you get enough people that want to rip their cog out from the system, that maybe you cause revolt. Maybe you cause a revolution, as they would call it. I don't know, but I want to leave with one story because it makes me feel like it's kind of connected. So I was in the military. I initially only joined the Army National Guard. I wasn't going to go like full like into the Army, but I ended up taking on full-time contracts, and before I knew it, I was in Afghanistan. And after about 4.5 years of service, I swapped back to just the weekends, and I started working in a prison system, and I was going to be a cop and all that. I was really good at PT. I loved physical fitness. I had the record, actually, in our state for PT score. I had a 358. I was proud of that. I enjoyed physical fitness. I really did. I loved working out. I loved running. I love push-ups, all that stuff. And I wanted to switch units. Now, of course, this was just National Guard. It was a weekend a month. But if, I was going to do my last year or so, I wanted to do something I enjoyed. I also didn't really rock with the current leadership. And so I submitted for a transfer, and I was denied. And I wasn't really given a reason for it. I was like, okay. And then I submitted another one the following month. And when I came back in the next month, I realized I was denied once again. I was confused because I had good numbers. I had a good record. I didn't do anything wrong. I showed up on time in the right uniform with the right attitude. And I got denied. And it sat with me weird. Until one day, my first sergeant, which if you're unaware of like the military structure, you have your officer in command, and then you're enlisted in command. And my enlisted in command was a first sergeant, I won't say his name, who brought me into his office. He said, Zach, I want to talk to you. And he was an older gentleman. He'd been in for like 30-something years, was about to retire. And he had like a wink-wink conversation with me. He said, Zach, I want to tell you why your application was denied for your transfer. You're being kept for your PT score. Our captain can wave the flag of your record PT score on his what's called an OER to submit for a quicker promotion. You're a flag. You're a cog. I remember walking out of that office, at first just ticked. I was so frustrated by that conversation. I remember sitting on the front steps and just thinking, okay, well, I'm here. Like, there's nothing I can do about this. I'm a cog in this system. I'm just here to benefit him. Next month, I had my last PT test, though. And I had a goal of getting a 370. I wanted to walk out with a score that maybe would set the record and keep it for a while. But I decided to do something different. I got to that PT test, and I told my guy, whose name was Sergeant Carroll, who was holding my feet for my sit-ups, to tell me when I hit my minimum, which I think was like 32. I did 32, and I got up. Then I had my push-ups. I could knock out, usually with the 360 score, 358 score, there was like 122 push-ups. It was just over a push-up a second for the 2 minutes. I did my minimum of like 40 and got up. After I did this, I noticed my captain looked at me, made a little eye contact, but nothing more. I was purposefully doing the minimum on my test so that he didn't have a flag to wave anymore. Then came the run. It was a 2-mile run. And the moment they said go, I took off like a rocket. I was going to, at first I was thinking, I've already got my minimum on the other scores. This score isn't going to help him in any way, shape, or form. I should just finish as good as I can do it. As fast as I can freaking run, just to show I could have done it. I ran, and I got to the finish line at about 10 minutes. It was like 10 minutes, 20 seconds. It was just under 10:30. I got to the finish line. I got right up to it, toe to toe, and I stopped. I looked at him, my captain, gave him one of those, 2 of those, with a nice old smile. And then I turned around. And I helped about 19 or 20 other people that normally struggled meeting their minimum, and I ran alongside them to help them cross the finish line so they can pass their PT test. And then at the very last moment, right as I was about to fail, I crossed the finish line, giving me the minimum score of 180 for my last PT score that would be left with this unit. And I think about that story sometimes because I think that was the first opportunity where I realized I was a cog in a small system and I had the ability to remove myself from it. And a lot of people are going to listen to this episode, or maybe 20 people or 200. I don't care. Maybe nobody listens to this. I'm just a guy in a basement talking. And think, well, what's the answer? What do we do? Well, there's 2 things, I think. I think there's only 2. You either fight for you or fight for the person to your left and your right. You either fight for yourself to the point where you become so spiritually aware, so emotionally sound, so at peace with yourself, not physically drawn to vices, disciplined in how you wake up, go throughout your day, spend time with your family. You live a life that is filled with love and try to benefit the people around you. Or you start fighting with the people to your left and your right. And what I mean by that is removing yourself from the system altogether. This is when you talk about general strikes and you talk about what's going on right now with the possibility of a tax strike. That is a way to remove yourself as a cog from the system. I'm not saying to do it. I'm not even saying you should. I'm not even saying it's smart. I don't think a tax strike would work. It'll just print more money. But I want to be real with you. I struggle with this a lot because it seems inevitable. We are walking toward a blockchain-backed robot economy. I don't like that. I don't like what my 7-year-old daughter is going to be walking into in 11 years. But the fact of the matter is, there are things that could be done, but it would take a mass amount of people to actually do it. It would take a vast amount of people to pick up their theoretical torches and pitchforks, eliminate themselves from the workforce, storm some, I don't know. I'm not gonna light pitchforks or light torches for you. But to be honest with you, the best thing you can do is fight for you. Put yourself in Word. Put yourself in books. Put yourself in a space where you're not listening to the radio all the time and all this sexualized, drug-infused drinks and breakups music. Stop indoctrinating yourself into the identity of sports and politics and find out who are you? What is the purpose of your unmarked soul? Why were you put onto this earth? I think there's a lot of benefit to that. And if you think that's corny and silly and stupid, that's fine. I'm not here to convert you. I'm here to tell you what I'm seeing in the tea leaves that I'm reading, that we are headed toward a system where if you don't hold on to an asset that's going to grow and inflate with this economy, you're going to be left behind. If you do not get to a point where you hold enough economically to sustainably live and grow with the inflation of this economy that has to keep going because we have to inflate because we're a debt-based society, you're going to get left behind. If you're just working for an income and that's all you're doing and trying to save your way to wealth, it's not going to happen. It's not going to work. And it's going to keep getting harder. So if you just want to be a part of the system and grow with it, hold on to assets. If you want to be a better person, start working on you. Start working on your internal. Start focusing your day-to-day outside stuff. Get rid of it. Stop listening to the news. Stop doom scrolling. Stop putting yourself in a position where you're in this mental space where you feel paralyzed. That's no way to live. Invest in yourself. Stop consuming yourself. You're consuming the negativity all day and night, and you wonder why you're anxious. You don't drink enough water, and you wonder why you're stressed. You're tired all the time. You don't lift. You don't run. You don't go play soccer with your friends. You don't do anything in the community anymore. And you wonder why this life feels like it sucks. I'm not saying everything's sunshine and rainbows, but I am telling you, you have power over you, and you are your number one asset. I'm not saying the next day, the next year, the next decade is going to be any better than what it's sitting at now. And frankly, it might be. I don't know. My magic crystal ball does not work. But I want you to not be blindsided by what's coming through, what's coming to fruition. I want you to be informed what's going on in this economy. And I know you're probably one of the people that's working their absolute ass off to survive. And if you're working 60, 80 hours a week, you don't have time to focus on what's going on in the economy. If you have 2 kids you're trying to put food on the table for, you don't have time to focus on what's going on in the news and what's going to be affecting you in the next couple of years. I aim to be that person for you. I want to be a beacon of information. I want to be a beacon of information that you can take into your day-to-day life and not just blast you with bipartisan nonsense, blast you with political agendas. I'm not selling a course. I'm not selling a class. I'm not bought in on anything you can buy in that's going to increase my net worth. There is no benefit financially to the information I'm giving you, so I don't care if you even take it. But I do care about you. And I believe I'm another human on the spinning ball in the middle of the vacuum of space that is filled with a lot of divided people. And I just hope that you could be one less of those people that's causing division. And maybe little by little that makes a difference. Maybe not. But in all love, I would love to pray us out. I'm a Bible-believing Christian, the Christ-following kind, by the way. I made a post on that if you're curious. But I'd love to pray us out. If you're not into that, love you. Talk to you later. Lord, Heavenly Father, thank you for everybody that we've been able to communicate with, the gift of the internet and digital technology for us to be able to reach voices and ears across the nation and the world. And I pray peace among anybody who is listening. Truthfully and honestly, I'm thankful for the opportunity to be able to be alive, to be able to communicate this message, and to be able to be a beacon of light in any way, shape, or form that I can, whether it's for one person, 100 people, 10,000 people. I pray that a little bit of light, a little bit of joy, and a little bit of peace would come onto the person that's listening to this just for the next 24 hours. They can take a deep breath, they can feel themselves, they can grow themselves, and they can feel your presence. I pray this in your heavenly name. Amen.